You are watching today's video technical update presented by FX Times. It is Friday, February 19th, 2010. I'm Fan Yang, your technical analyst, and I'll go over some developments in the Forex market. The greenback has been consolidating, but a Fed announcement at the end of the previous session boosted the dollar. I'll be taking a look at the euro dollar and the pound dollar pairs, and also the US dollar, Japanese yen, and the Aussie dollar pairs. This video is being produced at about 2:20 p.m. Eastern Time, near the close of this week's trading. Here's a look at the euro dollar pair in the 4-hour time frame. We saw some bottoming action here near the previous lows and a possible reversal signal. Early reversal signal. However, immediate after this bullish candle, we had a Fed announcement about raising discount rate from 50 to 75 basis points, and that boosted the dollar, so the euro dollar dropped. Here we have the drop to the 123.6% extended retracement of this swing, and the market here has reversed, and the Friday action so far shows dollar weakness, or unless some at least consolidation, at least the market staying in consolidation mode for now. So you see this consolidation channel here. The market tested the support and is at the moment rallying. So looking at the daily, we see this much more clearly, and we do see some divergence from the stochastic. So we continue to have dollar strength, but it has slowed down a lot, so I suspect there might be some further sideways action before a breakout. Now if there is a breakout, looking at the first swing, and I've already shown this in the previous sessions, and we could have a swing down to the 1.33 area, which is also the 78.6% of this swing here. Okay, so that could be the projection if the current decline continues, but judging from the 4-hour time frame, judging from the stochastic, ever since this point, the market has been consolidating. The pound dollar also saw weakness here yesterday, and you could see this reversal pattern forming, candlestick combination, but right after that the market dropped, and again it basically completed a channel breakout projection. The swing projection is still a little bit short of it. Let me see this. So 1.53 would have been the swing projection, but right now it's supported at 1.5350. Market looks like it wants to reverse, at least in the short term, so we'll see if the market can do that and map out some Fibonacci levels in case the decline continues. So this could go back up to retest our consolidation area here, 61.8%. So that this is a 1.50, 1.56, 1.5650 area. Now looking at the daily, we see that if there is further decline, that the market has yet to reach, or it has today reached the 100% projection of this swing. Further projection, and we could see that the stochastic hinting at further bearish continuation, is this 1.50, 1.51 area, which also matches the 61.8% retracement of this swing. So that could be the continuation projection right here at 1.5051. The US dollar Japanese yen pair accelerated this week's rally midweek, and we can see here this in the stochastic that it has taken a bullish stance. Before here we had although the market was bearish, we saw the stochastic was showing a consolidation or ranging momentum. Now it's bullish, and this would makes me suspect the beginning of a new bullish cycle. So looking at the daily time frame, we see here W at the stochastic reading here, and now the market stochastic is in the overbought zone. Here we have a possible head and shoulder developing if the market breaks this neckline here, or a reversal head and shoulder, that is. And a good hint from the stochastic in the upcoming week is if the market, has a little correction as it tests this declining trend line. We're at the 61.8% retracement of this decline, which is, a retracement of this decline to 50%. Of this rally to 50%. So now the market may experience some resistance here, but if the market comes back down but rallies from, let's say, the 90.75 area, then that's a very strong indication of this bullish outlook, and I would suspect the market continuing to rally until this neckline to find the next resistance area, and then a break after that would be very strong bullish signal for the long term, for the intermediate and long term. For now, we're obviously in short-term bullish mode, so we'll see if that could carry over to the intermediate and long term with these two, resistance and trend lines. Here's the Aussie dollar pair, and here's why we might have also be beginning a bullish cycle. Well, we already have a possible wave count with 1, 2, 3, 4 with the ABC retracement, and now we may be in our fifth wave. The stochastic shows that yes, we are in this bullish cycle, and this was a major correction, but since it's supported above 40 or 35 area, this looks to be bullish, so we might have our terminal wave still to come. Looking at the daily, here we have our third wave, and projecting that third wave up, our 61.8% would give us 0.9120. Let's see what the 78.6% projection of that swing would be. It would be a little bit higher, but in any case, this whole zone, this zone here is likely to be the resistance and likely to be the end of that terminal wave, so that this rally is really in the context of a wider consolidation mode. So the short-term rally should see some resistance here, but since we are in a longer-term rally, we should anticipate a possible break as well, and that would indicate here, if you look at, we're in the daily now, so I'm gonna zoom in or zoom out to a possible intermediate term projection. If the market breaks that resistance there, we might basically test our previous top here, and you see that we already passed the 78.6% retracement. So the next level after this break would be the 0.98 area. Throw in a quick look at the Euro-Pound pair. We might be seeing a Gartley pattern develop, and if the pattern tops off here around 0.885889 and bearish candle or a bearish signal follows, then looking at the weekly, we may continue to decline to the 0.84 area. However, if the market's supporting here, you see this triangle, if the market supports it, the market may actually continue to break this and continue to the 0.91, 92 area. That's it for this week. Visit fxtimes.com for more fundamental and technical updates as well as educational live events. Once again, I'm Fan Yang, your technical analyst here at FX Times, wishing you a great weekend.